Hi, I'm Bill Blain, strategist with Shard Capital. I'm in new surroundings this week as we've set up a temporary office while the builders are in at home. Now, December is shaping up to be an extraordinary month for markets. If you're at all concerned about just how euphoric markets feel, then the US IPO market is going to be causing you some concern. Toppy or what? DoorDash, a food delivery company that's never made a single cent in profits, is worth 70 billion, and it exists in a no barriers to entry, highly price competitive and ultimate risk sector. For instance, if Mickey D, McDonald's, makes a bad burger, they get the blame if you don't like it. Like many young unicorns, it's a concept company sitting in a very crowded space in the value curve. Money isn't actually made on the deliveries, but in the manufacture of the yields. And you probably aren't getting your Kentucky Fried whatever it is from the Colonel, but from some dark kitchen that sits in an industrial site somewhere on the outside of town. Costs get slashed there, but they can still charge you extra by slapping a posh restaurant's price on a 50p burger. Would you really know the difference after it's spent 30 minutes stuck in a traffic jam and you've just put it in the microwave? And then, of course, there's the Airbnb IPO. It was just completely hat stand. This is a company where analysts just at the beginning of December were struggling to justify a $40 price. Yesterday, it finally opened in the market at $163, and it's a very mildly profitable company. Is it really worth more than the global hotel industry or a multiple of the package sector, holiday sector? As some wag noted, it values every single Airbnb property listing around 13,000. So all a competitor needs to do is clone the software and marketing and then pay Airbnb owners something to switch to their firm so they become instant billionaires. Well, what's driving all these extraordinary prices? It's a combination of multiple factors, a conjunction of market madness, FOMO, the fear of missing out on any good thing, plus a complete and utter suspension of disbelief by an incredulous market of retail marks. The big banks and the funds will be delighted to take their IPO allocations and run. And let me try and explain why we keep getting extraordinary pricing in these markets. Think about it. Every single day you wake up and you have lots and lots of very clever ideas. My biggest failure has been failing to effectively monetize them all. Every so often, though, someone does monetize a clever idea and they make quintillions. Clever ideas that sound likely to attract money get money in the market. However, most clever ideas are not smart ideas. Smart ideas are the ones that really change the world. And sometimes it takes a very long time to discover a smart idea was actually just a clever one. Some people get very rich because they persuade investors their clever ideas are actually very smart ideas. Such deals usually end to the sound of a bubble popping. Ultimately, every investor wants to invest in the smart deals. Effectively, they like things that will produce good earnings, sound dividends, and aren't vulnerable to change. Effectively, ultimately, people want to invest in somebody that is a monopoly and is going to reap monopoly profits. So they buy into things like Standard Oil, Microsoft, Apple, and Facebook, which are, or were, in the case of Standard, monopolies. But they also buy the pretenders like Tesla, Snowflake, Airbnb, and the pet food delivery company that's suddenly worth more than the value of the Emperor's Palace in Tokyo because they think they're monopolies. Now, some firms are safe monopolies, like no one else is going to ever make an iPhone. Some firms are risk monopolies, where regulation to break the oil giants or control social media and to maybe deter Amazon from buying every single shop in the high street are all tangible risks. Some firms just claim to be monopolies. These pretenders might have first mover advantage, but they're vulnerable to competition as they progress. Now, if you're Elon Musk, and I wish I had his money, you can make lots of noise about Tesla and extend the illusion that it is a monopoly by controlling the narrative. Aye, it's not a car company. It's more. It's an energy, a self-driving company, a taxi monopoly at some stage. Eventually he doesn't deliver and it bursts. But give him credit. SpaceX is absolutely brilliant. And it could have become a valid monopoly, a duopoly in space launch, if Musk hadn't decided to use it to create his Starlink satellite internet monopoly, which isn't a monopoly at all because it's going to have to compete with everyone else that wants to provide internet services. But that's a story for another day. At the moment, the market is being deluged by all the money that governments and central banks have injected to stimulate recovery from COVID. What? You thought that money was actually being used to create jobs and to improve companies' survivability? Wrong. All that free money is actually just pushing up financial asset prices, and it has the effect of making the rich richer, which is why everyone who wants to be rich is investing in stocks, because it looks like they only go up. So they're going higher and confirming what these people want to believe, that stocks can only go higher. Therefore, they're looking for things to invest in. They should remember my number one market mantra. The market has but one objective: to inflict the maximum amount of pain on the maximum number of participants. That is always the case. That's why markets keep breaking. Now, I have read that internet purchases increased by some 63% through the course of the pandemic. Many stocks have been rising on the basis that the pandemic has accelerated a transition to new tech like Zoom or internet shopping. Or it could just be that these things have happened because the virus didn't offer us alternatives. And when this is all done and dusted, we might decide that we want to go shopping on a Saturday and visit high streets, or we might want to go to a luxury hotel, rather than that dodgy Airbnb where the owner is filming you in the shower. Just saying, because it does happen. The pandemic was a massive, unpredictable shock. The markets have been fueled by the massive, predictable response of central banks and governments. But the next massive, unpredictable shock is what actually happens when the economies all reopen after vaccination. It may not be what you expect. We may see something of a bounce back, and many of these unicorn valuations are going to look extremely foolish if that happens. Plus, we're also getting to absolute unsustainable levels. Let's keep a close eye on what happens next, but I can assure you Bill Blain buying Airbnb at the price it opened at yesterday is not going to be one of them. Thanks very much.